we are crossing over to the JSE to delve into Ansys' full year results. We had headline earnings per share coming out this morning. The company swung to a profit of 5.06 cents. That's, of course, from a loss of 3.86 cents. We've got the company's CEO, Alan Holloway, standing by to take us through the numbers. Alan, good to have you with us this morning. Delving into those numbers, of course, looking at the defense part of the business, a drop off there in terms of revenue, that was expected. And that's really what you've been seeing now, and you've been positioning the company to take advantage of the growth in the mining and industrial space and, of course, rail space. So take us through the performance of those three key divisions of Ansys for the year.
Good morning, Samantha. Thank you very much. Yes, we've had a careful year of consolidation, and I'm very pleased that it's resulted in a swing to profitability. Not quite the sort of profitability that we are used to, but still, it's in the right direction. The defense segment, after last year, funnily enough, has shown a surge recently. We have a number of orders for production of stuff that we developed in the past. So although we did less marketing, the orders have gone up, and this doesn't look very good on the marketing guys' KPA, but anyway. Yeah. We are continuing to serve whatever markets we can in an opportunistic way. And if there are decent, profitable orders out of defense, we'll do those. The main business of the company remains rail, and with the surge in infrastructure spending in South Africa and the announcements by the President last year, have caused a lot of activity in the procurement part of Transnet and of Prasa, and there are some very big contracts coming out that we are in the process of taking advantage of. In addition, the annuity type business of spares and maintenance, particularly spares, has been much better, and that's reaching an area of about 20% of our turnover. As we get more and more equipment out there and in service, so the spares sales go up, and it's fairly easy money. We deliver and get paid.
In terms of the
mining...
Yeah, sorry Alan, do continue with the mining, because I actually was going to ask, that was my next question, because you referred to, of course, exciting developments in the mining sector. Tell us about how you're positioning yourself for that.
Yes, thank you. In the mining area, we do rope testers. In South Africa, there are 1,000 deep mines, and just about all of these need access to a rope tester. If not a continuous one, then a portable one. The continuous rope tester is in production. We've delivered 11 in the last, or 12, sorry, in the last 2 years, and we're marketing that very heavily. This is a very nice product because it offers an annuity component as well in the reading of the data and actually the supplying of the data. In August, our portable rope tester will be ready. We've sold 7 of these already, which is quite nice. The customers obviously trust us to deliver something that works. This is what Ansys does. We do make it work. And the segment, it's a new product in a really a vacuum of a market. So we're hoping for the best with this. The market is a little depressed with the gold price and the platinum price being down, but this product saves money and can even saves lives. Alan, so we're quite optimistic about it.
Okay, Alan, that's what I wanted to ask you. I mean, just looking at the market's picture on a broader scale right now, I mean, just talking about that gold price, almost $1,500, the platinum price just above $1,400. I mean, surely you're right now looking at a situation globally that isn't conducive to mines spending more money right now.
Except that our product saves them money, and it can up their throughput for very little extra investment.
Okay, so obviously, as you say, cost savings would come through from that, and safety issues is also something to factor in. Talk to us about the Transnet pipeline in terms of their capex spend. They've got that target of 300 billion rand for the next 7 years. What slice of that pie are you hoping to receive?
Well, typically in signalling and trackside measurement, they spend about 7.5–8% of their big budget. Now, we are no longer in signalling, but in trackside measurement, there's probably a 2 or a 3% of that. We provide them with data to manage their whole network, and it's very important. They can improve their efficiencies a lot with our equipment, and they're focused on doing that.
In terms of the revenue targets right now, pretty much muted growth that we looked at in the full year, even though you had EBITDA from continuing operations up by some 680%. What are your revenue targets right now? How much are you hoping to grow revenue in the next year? Is that something that you're focusing on, that top line growth?
Well, we're still in a consolidation phase and we're pushing profitability more than anything else. You know, in this last year, revenue went up only 4%, but it was because we pushed away quite a lot of non-profitable business or less profitable business. We're continuing on that path, so I don't anticipate that we'll be shooting the lights out with regards revenue. There'll be modest growth, but we're really pushing the profitability side. We have our own factory now, so we're able to vertically integrate. We make our own products. That improves the quality, that improves the margins. And in this state that the world economy is in, you know, with all that quite horrible market data you announced just before my interview, we think it's right to be prudent.
Yep.
and not do too many, and not do any adventures. In fact, we are looking at other opportunities. The 4G market and the huge demand for data and down fiber is a big opportunity for value-added retailing, which is what we're good at. So we are looking at that. But the overall thrust of our management at the moment is towards profitability.